What's up, guys? Welcome to another episode. We just had the Coinbase earnings release and they blew it out of the water. So the shares popped and I have the earnings call live. We're going to listen to that and the Q&A, and then I'll talk to you about why I'm so bullish on Coinbase and the future of crypto. So let's listen.
And re-engagement from both simple and advanced traders. Notably, average trading volumes materially increased amongst our advanced traders. This resulted in Q4 transaction revenue of $529 million, up 83%. Both volatility and the mix of advanced and simple trading volume was similar to Q1 of 2023. And as a result, our Q4 blended average fee rate was similar to the Q1 levels. As a reminder, we continue to experiment with our pricing models for both consumer and institutional, and price changes may impact future quarters. However, to be clear, we did not make any material change to our fee structure in Q4. And the blended average fee rate that you see reported is simply due to mix shift on our platform. Now turning to subscription and services revenue. Q4 was $375 million, up 12%. The primary driver of the growth was blockchain rewards, which was influenced by higher crypto asset prices. In the fourth quarter, we experienced another quarter of native unit growth. We saw inflows in custody, an increase in staked balances. We saw growth in USDC on our platform. We closed the year with just under $200 billion of assets on platform. On to expenses. Q4 total operating expenses were $838 million, up 11%.
Damn.
Expenses were primarily driven by seasonal and performance marketing spend, increased legal spend, and our decision to increase bonuses in 2023 as a result of our strong full-year financial performance. Q4 net income was $273 million, and adjusted EBITDA was $305 million. Q4 net income benefited from strong revenue growth and two items. First, we released a non-cash tax valuation allowance of $121 million.
What EBITDA means in the comments,
Second,
please.
we repurchased $100 million of our 2026 convertible debt, which had a favorable P&L impact of $18 million.
Oh, I like that.
Now turning to our outlook for the first quarter of 2024. Overall, Q1 is off to a strong start. Through February 13th, transaction revenue was approximately $320 million. This is about 6 weeks of the 12-week quarter. We are seeing strong trends across simple, advanced, and institutional trading. Thematically, it looks similar to Q4. We expect Q1 subscription and services revenue to range between $410 and $480 million, with crypto prices being the largest driver of where we perform within that range. In terms of expenses, we expect technology and development and general and administrative expense to grow modestly to $600 to $650 million, driven primarily by higher stock-based compensation. We provide additional context in the letter. We expect sales and marketing expense to decline modestly to $85 to $100 million, driven by seasonally lower NBA spend. In closing, Q4 capped a strong year to our business, and we are excited for what 2024 brings. Before we turn to questions, I'd like to hand it over to our Chief Legal Officer, Paul Graywell, to share an update on the status of our SEC case.
Thank you, Alicia. As Brian mentioned at the outset, regulatory clarity is one of our top priorities, and one venue through which we are seeking that clarity is through the courts. We continue to see progress in the early stages of our enforcement litigation with the SEC. Just last month, on January 17, the judge in our case held oral argument on our motion for judgment against the SEC. This is still a very early stage of the case. It's always very hard for defendants to entirely dismiss any case at this stage, something that court statistics make clear. But we strongly believe that we are right as a matter of law, and we were grateful to see the court's careful attention to this matter and deep understanding of the issues at the oral argument. So, what is next? The motion is under submission, and the court did not specify any timeline for decision. There are multiple potential outcomes. The court could dismiss the complaint in its entirety, dismiss some of the claims but not others, or dismiss none of the claims at this early stage. Any claim that is not dismissed will then be the subject of discovery, which is a process that can take time. We are ready for discovery if that is the next step, which would include discovery for both sides. After discovery and before trial, we will have the opportunity to file a motion for summary judgment, which is similar to our pending motion in that it can end a case before trial. That is the type of motion that disposed of much of the Ripple case. Whether the case goes to trial or is dismissed, we will get the clarity we have long sought. We are confident in the outcome, whether it comes later or it comes sooner, because we are right on the facts and right on the law.
It's interesting how they're pushing for regulation.
Thank you all. With that, let's turn to shareholder questions.
Like most people,
We are taking the most upvoted questions as determined by the number of shares. The first question, why do insiders continue to sell their shares daily?
Thanks for the opportunity to share some context around this topic. First,
Probably not.
all of our insiders, myself, Brian, Emily, Paul, those on the phone, and all of our insiders, we all share long-term conviction in Coinbase. Second point I want to make. Equity is a significant component of the compensation that we offered insiders and employees alike. We believe this most closely aligns our incentives to business performance and the interest of our stockholders. Third, it's important to note that these sales account for a small portion of insiders' total holdings in Coinbase. Last, executives and the board can only trade via trading plans that are governed by SEC rules. And we maintain corporate policies governing these plans that are commonplace amongst public companies. Nobody is trading based on real-time stock price movements, company news. All of our trading plans are required to be set up well in advance.
I believe that, but
further, they're disclosed in our public financial filings, and they allow insiders the ability to sell at a predetermined number of shares at a predetermined time or price. Our stock was up nearly 400% in 2023, and as a result, some of those thresholds were met and sales were executed. But I just want to close. We are all holding long-term conviction in the opportunities at Coinbase.
Yes.
Let's go to our next question. What is the plan to expand revenue drivers outside of the ETF custodian plans? The market shifts quickly and Coinbase needs to be nimble, both within the US and abroad. We've seen your shift into the European markets. How will this evolve going forward? Brian?
Yeah, so I'll focus on the ETF question since there's been a lot of buzz around it. And we've always said that ETFs would be win-win for Coinbase, and we're starting to see that play out on our platform. So in preparation for this launch, we won 8 of 11 spot Bitcoin custody mandates from issuers. And today, Coinbase custody is about 90% of the 36 billion in Bitcoin ETF assets as a result. So across the entire industry, we've seen over $4 billion of net inflows into spot Bitcoin ETFs. The Bitcoin ETFs are breaking records. And when gold launched in November 2004, it took 1 year to get to 3 billion. These ETFs did that in a few weeks. And so this is really an incredible start. This is really just the beginning. We're now starting to see some of these issuers file for Ethereum ETFs, for example. We've been named as the custodian in 5 of the 8 ETH ETF applications.
You can already
and
trade
custody isn't really the only way that we're monetizing this. We're also helping with trading via Prime. We're helping with financing for trade settlement. So there's other opportunities to generate revenue here. For anybody worried about cannibalization, ETFs have been positive for the industry, which has been additive for Coinbase. We're seeing elevated engagement and net inflows across both retail and institutional Q1 to date. What's even more important is that every institution is now starting to hold crypto. The asset class will be a standard part of every diversified portfolio. The financial system is officially adopting crypto. This is really good, and Coinbase is the most trusted partner here.
Our next question. Coinbase's venture portfolio is a hidden gem that Wall Street doesn't seem to be taking into consideration in their valuation of Coinbase as a company. During the earnings call and potentially in your materials, can you highlight this portfolio and its long-term opportunity? Emily?
Yeah. Well, I definitely agree it's an undervalued long-term opportunity, and I think we have a strong disproportionate advantage in the market. By the way, I should mention that the value of our portfolio is held on our balance sheet at cost. It is not recorded at fair value.
2x.
So we booted up Ventures 6 years ago when I first joined, and one of the things that Brian and I talked about was, what if in the early days of companies such as Google and Facebook and others, those companies had been able to make investments in the most exciting emerging internet companies at the time, like a Stripe or a Shopify. So that is what we view our opportunity in the crypto ecosystem. We started it very scrappily with no dedicated team or resources. We just started investing in great startups. And we are now one of the most active investors in the space with more than 400 investments in our portfolio. I view our competitive advantages as having great relationships with Coinbase alums and the ecosystem. One example is Sparkcaster that Brian mentioned before. That's one of the Coinbase alums who founded that. We also take a very long-term view. We don't panic when the market sells off. It's kind of the opposite of a herd mentality. We double down when others are fearful. And we love it because it helps us stay connected to the crypto frontier and to invest in the ecosystem. One area we're seeing tremendous energy around right now is the creator economy. So companies such as Paragraph, XMTP, Sparkcaster, all of these are looking to decentralize existing social platforms. And then looking ahead, we're really excited about on-chain consumer applications such as gaming, social messaging, and media. And then there's a lot of new protocol developments like restaking that we're excited about. We're also seeing a huge growing opportunity outside the US, and our portfolio has a strong footprint in the global crypto ecosystem. One other thing I should mention is that because of the US's lack of clear regulation on crypto, we are pushing a lot of innovation outside of the US. The US has been losing 2% of blockchain developer share annually since 2017. And this is following the same patterns as semiconductors and 5G moving offshore. It really just reinforces the need for us to have clear legislation. And we think it's a huge opportunity that the US is currently squandering. It's also why on the venture side, we are investing globally. There's a lot of interesting regional exchange platforms across Latin America, India, Africa, and other regions.
Great. So with that, Sarah, let's switch and take questions from the analysts.
Thank you. Once again, as a reminder, it is *1 for a question. Your first question comes from the line of Ken Worthington with JP Morgan. Your line is open.
Hi, good afternoon. Thanks for taking the question. I wanted to dig a little more into payments. We noticed the recent partnership with Ledger, and you announced the updates to Commerce earlier in 4Q, and clearly there's the enhanced relationship with Circle. So maybe first, how do the different pieces kind of fit together to drive what you're trying to build? Second, in terms of the use cases, is this basically cheap remittances for retail and 365-day-a-year transfer for institutional clients, or is there a longer-term vision? And then lastly, what does the revenue model look like for Coinbase and payments? Is it more asset-based or is it transaction-based? So thanks for all those.
Yep, I can take that one. Thanks, Ken. So as you mentioned, payments is one of the areas that we're exploring in 2024 around utility. And I'm pretty excited about that as an opportunity. I mentioned in the opening comments that last year we did announce that you can send USD coin on Base and instantly anywhere in the world for free. So the cost and the transaction fees and the confirmation times are really starting to come down. And the more you reduce friction, the more payments you'll start to see. And so there's a variety of different use cases for payments. You know, payments is a huge industry. Some of this you can look at in emerging markets where people have local currencies where there's high inflation. And so, you know, the dollar has a great brand there. People want access to the dollar. So they're able to do that now with stable coins.
That's always been a crypto
USD coin kind of gives them a trusted option that's
government corruption,
you know, regulated. And the partner we have with Circle, you know, they've been a great partner. They're a great issuer of that. So emerging markets, demand for the dollars as an inflation hedge, I think is a starting point. And then once people have those dollars, they're going to want to start to, you know, pay for things in their ordinary course of the day with those instead of the local currency where they're experiencing that inflation. So some of that is cross-border, like you said. There's people in some of these markets that they're ordering goods and services for their shops, you know, from Asia or Europe. So some of it's cross-border, some of it's for B2B, some of it's remittances. You know, some of it is also, they just want to earn yield on their assets. Like, you know, as an inflation hedge is a great start, but if you can earn yield, like in some of these, like with USD coin, that's even better. So there's sort of that emerging market use case. And then, you know, we've also dabbled in payments kind of in other areas. Like you mentioned, Coinbase Commerce launched this on-chain payment protocol, which is really innovative. We're trying to make crypto the simplest, easiest way to pay on the internet. Even Coinbase Card has allowed people to spend their crypto and USD coin at anywhere that Visa is accepted.
This is what I was talking about.
There's a lot of different use cases. I mean, if you kind of want to zoom out, you asked about what's the longer term vision here. I mean, we really want to update the financial system, right? We want to have crypto play a larger and larger role in the global financial system, have it be a greater and greater percentage of GDP over time. And so crypto really started off being this asset class people trade, but we now need to look at how it can improve these other areas. And payments is a huge one. And as we've seen layer 2 solutions come online, like Base, I think the time is now to start to invest in that. You asked about monetization also. I mean, look, this is all really early stage. So we don't have any kind of forecast on it or anything like that, but there's opportunities for us here to monetize via Base, also via USD coin, which you can see pieces of in our financials today. So that's all long term. I think if we can drive a daily use case with crypto, even if people don't even think of it as crypto, they're just oh, the fees are lower. My money arrives instantly instead of waiting 3 business days. They may not even know it's crypto underneath, but that's how we get 1 billion people eventually benefiting from this. And I think there'll be a lot of opportunities to monetize that over time.
Got CNBC on the screen.
Your next question comes from the line of Chase White with Compass Point Research and Trading. Your line is open.
Thanks for taking the question.
Not that I am opposed to
so
CNBC
OpEx came in, a bit higher than guidance across the board, each line item, which appears to, at least in part, be driven by the stronger market conditions. It seems pretty clear, to us at least, that we're heading into a bull cycle, and we're just now getting into it. I mean, obviously that should drive trading volumes and revenues higher, and really most revenue line items potentially a lot higher. So, how should we think about the various OpEx line items if the business were to return to prior cycle highs or even higher? Is there a need for tech and dev, marketing, G&A to grow significantly from the current run rates in lockstep with revenue, or should they kind of stay flat where they are? Just a little color on that would be great.
Thanks, Chase. Happy to answer that one. So broadly, we have some variable costs that will track with revenue growth, and those are largely our transaction expenses. As we've shared with you, that includes miners fees, that includes verification, and just some various costs with transaction, and it also includes the payout of staking rewards. Those ones will drive 100% correlation with our revenue. We have a few other variable costs. We will need to add, for example, more CX customer support costs. We will need to add some more network support if we see significant volume, but it will be very modest. We can absorb a lot of volume growth without adding expenses. That said, we continue to look at our expense base and invest proactively in diversifying our revenue streams. And so if we see ourselves in a prolonged up market, we may choose to increase expenses, but we will be very transparent with the street if we make that decision later on this year. We've given an expense outlook for Q1 where we expect some very modest changes to our Q4 results. And so at this point in time, you will communicate in that way with you and expect expenses to be pretty modest and changing year for the next few months.
Your next question comes from the line of Owen Lau with Oppenheimer. Your line is open.
Hi, good afternoon. Thank you for taking my question. At a House hearing yesterday, Undersecretary confirmed with Congressman Tom Emmer that a report about Hamas using digital assets to raise funds was inaccurate, and crypto was not even a popular tool for terrorists. Even though Chainalysis put out a report to correct that record, it doesn't appear that it gets enough attention. So I have 2 questions here. Could you please talk about Coinbase investments in anti-money laundering program to protect your customers, and also your reaction to that conversation? Thank you.
People need to understand chain analysis.
Thanks, Owen, and thanks for noticing that. We were really pleased to see that House hearing yesterday and really pleased with the correction of the record here. One, we have significant investments in AML. We have a large compliance team that has best-in-class compliance approaches, the same as any other fintech or bank. We follow very standard rules in this place and are governed by our MTL licenses and our Bitcoin license with NYDFS. We're really proud to be one of the most compliant crypto companies, frankly, in the world with this regard. I will have Paul share a reaction to the hearing, and maybe I'll pass it over to you, Paul.
Thanks, Alicia. We were very pleased to see the Congress pay careful attention to this issue. French Hill, chair of the subcommittee, could not have been clearer when he observed that the Treasury Undersecretary made explicit what we have been saying all along, which is that bad actors still prefer to use traditional finance rather than digital assets to fund their activities. That I think was an important validation of something that we've been saying for a very, very long time. And Mr. Nelson, the Undersecretary, also confirmed that prior reports that have been published that successful international collaboration with Israeli law enforcement had limited Hamas and its use of its digital assets ahead of the attack against Israel. So we think that the facts are clear, and we are pleased that when confronted with those facts, the Congress is underscoring that crypto is an answer to the problem of illicit finance. It is not solely the problem.
Tech companies can fight terrorism, definitely.
Your next question comes from the line of John Todaro with Needham & Company. Your line is open.
Thanks for taking my question. First off, congrats on the quarter. Pretty great results here. I have two questions on the institutional business. So it looks like take rate there went up. Trying to understand what drove that, or if there was some other revenue that went into that institutional revenue, whether that was base chain or derivatives. And then second, as we think about Q1 24, have the Bitcoin ETFs, is that driven more institutional activity on the platform, where moving forward we should think of institution as a greater makeup share of the total volume?
Speaking of mix shift.
Thanks for the question, John. So embedded in our institutional product revenues are really two products. One is a markets business, which is our exchange, where we have market makers and liquidity providers transacting directly on the exchange. And the other is Coinbase Prime. Coinbase Prime has a higher fee rate than the exchange. And so similar to the consumer side, we see mix shift driving the blended average fee rate on institutional. And we're seeing strong growth of Coinbase Prime, and it had a larger share of volume in Q4, which drove the increase in that fee rate in the fourth quarter. Going to your second question on have Bitcoin ETFs driven more INSTO activity, as we shared earlier and Brian shared in his response, ETFs have just been net positive for the industry and additive to Coinbase. And we're seeing elevated engagement and net inflows on institutional as well as retail Q1 to date.
Your next question comes from the line of Devin Ryan with JMP Securities. Your line is open.
Great. Thank you so much. From what I can track, you guys have seen a very sizable acceleration in derivatives volumes. Even in recent weeks, it seems like it's been accelerating quite a bit on the international exchange. So nice to see the momentum there. And obviously, we know that derivatives market's larger than the spot market. So I guess, first off, how would you frame the scaling that you're experiencing already relative to how you're thinking about the broader potential longer term? And then second, what does a user profile and take rate look like there now? And then where do you see that user mix and take rate moving over time as it matures? Thanks.
Yeah, I can start off on derivatives, and then Alicia, maybe I'll turn it to you on some of the take rate questions. So, thanks for tracking. We have been hitting daily all-time highs on our international exchange, which has been really great. It's still early days, just to be clear, but the market, I think, has really demonstrated they want to see a trusted counterparty here built in a compliant way. And Coinbase is really the first company they've seen come along that fits that definition. So we've been making a lot of progress on our international derivatives exchange. We added 11 new markets in Q4. We're now up to about 70% of global TAM. We announced that we're acquiring a MiFID license that'll help us unlock derivatives in about 20 additional EU member states. We've been adding new product features like 10x leverage. We did that in Q4. I think we've had about 16 billion in notional volume traded on our international exchange in Q4. So it's been really good progress on that. The same thing, by the way, for Coinbase Financial Markets in the U.S. We got licensed to trade U.S. futures, which has been really great. And so, yeah, I think our daily milestone that we just surpassed actually today, it was 700 million in a 24-hour period. That was on the international exchange. So really great early start. I think that clients are going to continue to want to prefer a trusted counterparty that's following the rules. Coinbase is the brand that can help them do that. And derivatives trading is actually about 75% of all crypto trading, by volume at least. The take rate is lower on it, but it is the majority of volume. And so I'm just really glad that we're now starting to build our business in that area. Alicia, anything you want to add on take rates?
Sure. As Brian said, we are early days in derivatives. We're excited about the progress, but we are just getting started. As such, our current goal is to really gain market share. We are offering tiered pricing over time, but right now it's going to be competitive to build liquidity and attract users, and we'll experiment and adjust as we scale.
Your next question comes from the line of Benjamin Buddish with Barclays. Your line is open.
Hi, good evening, and thanks for taking the question. I wanted to follow up one of the earlier questions on the Prime business. Can you maybe do a little bit of a dive into what specifically you're doing there? Obviously, we would assume there's some kind of execution, but what are the sort of services you provide? How are you monetizing them? And can you just confirm that any revenues through Prime are also reported, or confirm or not confirm that they're reported within the institutional volume metric that you give?
Why don't I start with this? So Coinbase Prime is our one-stop shop for institutions. It comprises a suite of products, including custody, trading, financing. Those are the large three that are in that umbrella. When you look at our institutional transaction revenue, that is largely the trading business. We separately disclose custodial fee revenue, and the financing business is largely in other subscription and services right now because it is still nascent and growing, and we haven't broken it out as a separately disclosed line item.
Your next question comes from the line of Pete Christensen with Citi. Your line is open.
Thank you. Good evening. Alicia, I'm a little surprised the sales and marketing is expected to be flattish, I guess, into Q1. I would think, the status of the asset class, international business picking up, Coinbase would want to lean in a little bit more there. I was just wondering if you could talk to those dynamics. Maybe you're seeing different mix shift that's impacting it between institutional or retail, or maybe you're seeing better marketing efficiency. I was just wondering if you can walk us through that progression and how you're seeing the setup for this year.
Thanks, Pete. So a large part of our sales and marketing spend is actually in brand spend, and we have seasonality with an MBA contract. And so what you see is a shift in spend between Q4 and Q1, where we will spend materially less on that MBA contract and redirect that spend to other areas, which is leading to a slightly down guide for Q1 versus Q4, but we are reinvesting. We are really proud of our marketing efforts, and I might call Emily in to answer some of this question, but we really feel like we've hit our stride with marketing over the last year and are continuing to lean in and invest where we see strong ROI and strong return on those investments.
I agree fully. The marketing investments have been very high ROI. That's one of the things that we've demanded since we've implemented the program, and I think that we're going to continue to test the boundaries of it, especially as we expand more and more into policy marketing to get our messages across to policymakers.
Your next question comes from the line of Bo Pei with U.S. Tiger Securities. Your line is open.
Hi, management. Thanks for taking my questions. So some question on the take rate, retail take rate. So with the recent approval of spot Bitcoin ETFs, most people believe crypto is now becoming a more mature asset class. And typically, as a new asset class becomes more mature, one should expect trading this asset to become cheaper. So do you think crypto investors have become more sophisticated now? And do you see more traders migrating to the Coinbase events platform? And do you expect the trading take rate to gradually decline to below 1% in this crypto cycle, like in the next 1.5 years or 2 years? If this happens, do you believe the volume increase can more than offset the take rate decline? Thank you.
Thanks, Bo. I'll share. Since we went public, we've received a question on fee rate and fee rate compression or cannibalization every quarter. And we have yet to see that phenomenon on our platform. And we have yet to see that as a result of the ETFs as well. As we shared, even in quarter to date, Q1, we've seen net inflows across both retail and institutional, and we have not seen any shift in our customer behavior as a result of the ETFs. All we've seen is ETFs being a net add to the industry, net positive for Coinbase, net positive for the industry overall, with more engagement across the board with both our retail and institutional clients. We've shared over time, we agree with you with the thesis that as you see commoditization, you should see fees come down, but we do not see that today, and we continue to see customers choose Coinbase for the breadth of our product offering, the security of our platform, and we think that that will continue to persist for some time.
Brand value.
Yeah, I guess the only thing I'll add there is
like never considered with tech companies.
Yeah, sorry, I just wanted to add, I mean, just a reminder,
companies ever.
You know, the entire industry, we've seen about $4 billion of net inflows since the Bitcoin ETFs launched. I think that's really additive. The thing to remember here is we want crypto to really update the global financial system. So that means we need to get it integrated into more and more parts of the financial system. Every time that happens, we're sitting here cheering for it. We want fees to come down, make it lower friction for people to get into crypto through all kinds of different vehicles. ETFs are a massive way to get more capital to come in. So far, we have not seen any cannibalization, as Alicia said. It's been additive for Coinbase, and we're seeing elevated engagement and net inflows on both retail and institutional Q1 to date. So in my view, the ETFs are just a totally positive thing. And the more institutions that kind of get their feet wet with crypto, whether it's through an ETF or any other way, the better, because they're eventually going to be using it in other ways, holding it on their balance sheet, paying their vendors, doing payroll. We want crypto to power more and more of global GDP, and we've got to get this happening through every opportunity we can. So the ETFs are incredibly positive, I think, for our business.
Your next question comes from the line of Joseph Vafi with Canaccord Genuity. Your line is open.
Hey guys, good afternoon. Thanks for taking my question. Nice results. I've got a few, but maybe I'll just focus my question on a follow-up to the previous one. Owning the underlying spot versus owning an ETF may seem the same for some investors, but I'm sure you've thought a lot about, owning the underlying spot versus an ETF and your differentiation in that. And so it would be great to hear, what you see perhaps as the benefits of, owning a Bitcoin outright versus owning an ETF. Thanks a lot.
I can start, and Alicia, maybe you can pop in. One of the things we wanted to do in this ecosystem was play the role where we have the kind of strongest competitive advantages. And because we've invested so much in the custody solution and the prime services, it felt like a really good area for us to play. And that's why we garnered the majority share when we were working with these ETFs. Separately, we also want to make sure that we are able to invest in solutions where clients can invest in different crypto assets, and we have CBAM, Coinbase Asset Management, as something separate from that. But I think we're trying to play the role that is best for us in each different part of the value chain. Alicia, anything to add on that?
One thing I'll share is that the majority of customers on our platform do more than just own Bitcoin. Most customers own more than 2 crypto assets. If you look at our trading volume for Q4, 42% of our trading volume was in other crypto assets, not Bitcoin, not Ethereum, not USDT. So I think that what we believe is that the Bitcoin ETF is introducing new capital, folks that were not coming to the spot market, folks that may want to invest to their 401k, invest in a fund. And that's where we're seeing more adoption, more growth, more awareness of this asset class. But what we see is that when people start to learn about Bitcoin, they often then become excited about another asset. And they want to use that asset. They want to stake. They want to explore the crypto ecosystem and the decentralized applications. And so we're delighted to see the expansion of users and investors in this asset class. We believe this is going to be just net additive to the space.
Sarah, we have time for one more question, please.
Thank you. Our final question will come from the line of Alex Markgraf with KBCM. Your line is open.
Hey, everyone. Thanks for taking my questions. Maybe first one for Paul, if I could. Just on the challenge against the SEC's decision not to engage in rulemaking, just could you give us an overview of the process here and sort of the range of outcomes that you're looking to?
I'm happy to do that. You're referring, of course, to our petition that we filed in the Third Circuit Court of Appeals, challenging the decision of the SEC to reject or deny our request for formal rulemaking. That challenge is moving ahead. We were gratified to see the court set a briefing schedule. A briefing will begin next month and continue on into the spring on this question of whether the SEC acted within its discretion in denying that request for rulemaking, or acted arbitrarily and capriciously in denying our request. We're confident that the Third Circuit will see it our way, and we look forward to the opportunity of presenting our arguments at the appropriate time.
I could tell you about that in a second.
Great. Well, that's it for today. Thank you all for joining us, and we look forward to speaking with you again next quarter.
Okay.
This concludes today's call. You may now disconnect.
Good game. See you guys. Until next quarter. We close. So, yeah, leave. What they're talking about is basically being targeted in particular by the SEC in all these different legal ways. Not sure why this isn't actually closing. Let's see. Leave. There we go. And so Coinbase is a very interesting company, and it's one that I've followed since the very beginning. I remember when they were in YC. I was in Silicon Valley at the time. I actually was working in Palo Alto, right on, what is that main road? Like Maine, I guess, wherever, right before you get to Stanford. It was a cool time because there was all these different startups at the time, Robinhood and Coinbase, and it was pretty recently after Facebook had moved their like super headquarters to like the city, or maybe it was before then even, can't remember. Anyway, point is, there was some hype around all this stuff like 10 years ago, and that hype is being realized. To me, that's what's so like mind-blowing about crypto, and what's so exciting about it is the dream is actually happening, right? The things that we talked about a decade ago in terms of disrupting finance and providing financial sovereignty to individuals and incorruptible ledgers and distributed network effects tied to money, like, and then just like the real cool stuff, like we used to talk about how one day a country would adopt Bitcoin, and El Salvador did it. They mine it with a volcano. They have a volcano mining Bitcoin. Just think about that. It might be the coolest thing about being a human in 2024. Feels like we're in 2025 when we say shit like that. Let's get a cool screen going. Can we get pause? Don't leave. I know that this will create a drop in retention, but I want to have a fun little thing. Let's see. Behind me, I want some kind of animation. So let's go like that. And then does this have sound even? Oh yeah. All right. Boom. I like that. Boom. Got it. Okay, maybe the sound is annoying. Let's see how low we can go. That's all. It's annoying. Okay, so what am I talking about? Like all this stuff we used to talk about is like, well, so people talk about how Bitcoin has no value, which is like kind of hilarious because obviously it has, each one of them has $50,000 of value. If you value the United States dollar, there's arguments that you shouldn't. I don't believe those. I think that people like talk about the value being devalued. Yeah, kind of. I don't see it the same way. It still represents the might of the U.S. military and the companies, the military, both private and public. I mean, not that companies are military, but like the offensive generative forces of our society. I'm having a hard time basically I'm talking about the economy. So all of these kind of like ideas that we used to talk about with crypto back in the day are actually happening now. And so it's really exciting to see. My big bet on Coinbase, and I got squeezed out of it a little bit, but I still am in it pretty good amount. And I plan to very much accumulate. Like, the thing about Coinbase is they are the Coinbase. They're literally the Coinbase. They're like the base of all the coins. So like, it's in the name. God, I need at least 4,000 shares. That's just a baseline. Somebody can help me get it. If you're like a bored billionaire, you see this video, maybe you're like, hey, that guy gave his share target. Maybe I'll just help him get it, right? Why not? You know, I don't know. That stuff doesn't happen yet. So the reason why Coinbase has infinite value is like multivaried, manifold. There's many reasons why, but let's just start at the foundation of what separates Coinbase from every other crypto company, okay? From every other crypto companies. Okay, there's like a lot that separates them that's really important and distinct. Number one is the actual brand and culture and history. No, it's the brand. That's the right word to use of the company. And the reason I emphasize that now is because of this new wave of adoption of crypto, which is institutional crypto. And those guys aren't going to work with amateurs or criminals. And Coinbase is like squeaky clean, by the book. They're making the book. They're trying to get the Congress people to like write the book. And they have never been hacked. And time again, we've seen fraud and deception and idiocy and lunacy rife in the crypto community and throughout all of history, starting with Mt. Gox, right? When the original hack of Magic the Gathering cards website is so crazy. This fat dummy, what was his name? Mark Karpellis, something like that. Fucking bought a Magic the Gathering trading website and converted it into a Bitcoin exchange. Okay. So like, that's who we're dealing with. Then I can't even remember the details, and I know I'll get fact checked, so I don't want to share too much, but basically he lost everyone's money. Like, all of the Bitcoin in the world was in Mt. Gox because it was like the first exchange. And that happened to BTCE, that happened to just barely happened to FTX. So like, this stuff has been happening the whole time. And do you want to know who has the purest record of white marble, freaking granite, whatever, strong, great, clean record is Coinbase. They've never had anything. I mean, they've had like their customers lose their funds or whatever, but they've never had a large scale hack. And it's because they're psychos about security. Like, I've listened to Brian Armstrong describe their process. It's basically like what you would see in a movie or whatever, where like they shard this key and send it to 7 different countries and nobody knows. And you have to do a blood oath sacrifice just to wipe it on the door to open the cave. It's crazy shit they're up to. So that's what Coinbase is all about, is security through rituals and magic, through cryptography and through whatever, like, however we secure things. What is the SHA-5256 algorithm is how we do it. And so, so why am I telling you all this? Well, just to show the distinction of Coinbase and try to illustrate what makes them different from the miners, or there's not really any other exchanges, or even Robinhood. They're distinct, and importantly distinct from Robinhood. And they don't even really compete in the same space, I don't think. And, there was like this talk about Coinbase getting into stocks, and Brian Armstrong resisted that dutifully. And I think that was like really wise to stick, like, because it's insanely complicated, the space of crypto. And I think that to work in it, and I'm only an observer, right? I'm like a casual on the outside, but I've been in it for a long time. So I know the depths a little bit and the breadths, and what doesn't even matter what I know, because I know it's always expanding. So whatever I know is already out of date, like every single day. So that's crypto is moving fast. And the reason why is things that like it would take hours of me, depending on the person, to illustrate, I think, really. But some people might be able to really get it easily. Just distributed trust. Just think of the cost of trust. Like if you completely trust somebody, if you completely trust them, then you can, infinitely more things are now possible. Infinitely more things are now possible. And it opens up its own economy. Now, nobody can do that. We can't trust people. We can't even trust ourselves. But we can trust math and cryptography and cryptocurrencies. And they both store and transact the most important resource, which is our abstraction of time and work, as seen as money in the form of Bitcoin or USDC or United States dollar, whatever. That value is now able to be exchanged and mediated independent of any state. For the first time in human history, since like they were trading shells and shit at the ocean, this is the first time people have been able to transact without a government. And the government can't do anything about it, and that's why they have to oppose it. And I had a kind of a pithy way to say it the other day, that like banks and governments don't like Bitcoin because they can't make more of it and they can't control it. That's what it is. So those institutions are fundamentally, well, anyway, it's too much of a divergence to talk about that shit. Let's just stick with Coinbase and cryptocurrencies. And I want to try to illustrate what makes them different than any other crypto company. So I already kind of talked about like how there's this brand, and that might not seem to be like, that important. One, I think brand value is generally undervalued in tech, as I said. But that's kind of like neither here nor there in this discussion. It's important in the context of Coinbase because of institutional investors. So there's going to be real money of like sovereign nations, and there's going to be sovereign wealth and private wealth deploying into cryptocurrencies as they continue to take market share in the transacting of value. And the reason they're going to do that is because it actually is way cheaper and trustless. And you can't compete with that. You can't compete with that. JP Morgan, unfortunately, I mean, they probably own like a good amount of everything just to hedge or whatever. I would assume that they do. But the problem with being JP Morgan is you have a brick and mortar business and you got to pay people and their health insurance. And even if you replace them with Tesla bots, you still are paying for the electricity and probably even the air conditioning for your patrons who come in to the bank. So crypto has none of that. Crypto is just an algorithm. It's just like processing numbers. And it is pretty hilarious that when people find out like the truth about Bitcoin, it's so dumb. By the truth, I just mean that like there's nothing to it. I mean, what is it? It's like a history of transactions that are signed by this verification, which you get from guessing a random number, totally random, gets harder to guess every time. It's like a gazillion digits long now, but it used to be just like 1 through 10. And then it was like 1 through 1,000. Then it was like 1 through 10 million instantly. And now it's like 1 through super gajillion, bazillion, big number. But people guess it. I mean, not people, computers guess it like continuously. And that's why mining is so difficult now. And anyway, so like all this stuff about Bitcoin. Well, yeah, like people will say like, well, what's special about Bitcoin? Nothing. It's just first. I mean, that's what's special about Bitcoin is it's first. There were other, it's like what's special about Facebook versus MySpace? Nothing. They just did it better. Or they got colleges or whatever. They hit a critical mass. So it is with Bitcoin. and the concept of cryptocurrencies in general. And anyone with half a brain can understand why you would want an independent transaction and store of value from any government influence. You know, like a kid would know not to trust the government. So like, we love the government, right? Thank you for serving and doing your duties and giving dutying all over us or whatever you do. Thanks for doing all that. But like, we need the government to function. So it's like no use shitting on it. Anyway, point is, as far as brand value in Coinbase goes, the institutions and the sovereign and private wealth that is going to deploy into crypto is not going to handle that complexity themselves. It's way too complex. And they're not going to hire they'd have to hire a team. It's way cheaper just to pay a custodian. Problem is, who the fuck do you trust in this world of trustlessness? Like, and in this world of FTX and BTC and Mt. Gox and a million more and Celsius and, you know, endless fiascos in the crypto space, NFTs and everything is like rife with scammers, which is how it would be always. Like, you think in the gold rush, people weren't selling fool's gold? Like, obviously they were, totally, en masse, probably more than ever. You know, like, they probably do it. There's probably going to be a decline in malicious activity in crypto, like inversely correlated, like, or in this case, positively correlated with the adoption of crypto, with the usage. So as usage rises, fraud will fall. I believe that. And it's partially because it's a new thing. So anyway, like the sovereign and private wealth isn't going to want to take the time or the risk or the money or the whatever to try to understand all this, but they're going to get the fundamental idea that this transaction of value, independent of any government, is something that people will find valuable. Even if you don't find it valuable, people will find it valuable. And I think that they know that. And so they're going to make an allocation. And when that happens, it's going to be crazy because every Bitcoiner, except for me, is like a long-term hodler. I try to be a hodler. They slip through my fingers. Like I like tossing them in the water. Anyway, not really. I'm an accumulator. And so like now I'm back in an accumulation phase because we're getting close to where I sold. And so I want to, you know, make my money back or whatever, or like buy back my Bitcoin. Basically, why am I telling you about all that? Well, I don't know why I'm telling you that, but what I do know is that sovereign wealth funds and private wealth funds are not going to hire, you know, an expert in this area. They're just going to make an allocation through the most trusted institution available. And there's just no doubt. It's not even close. It's like, I don't know. It's like a white palace, marble palace versus like a rotting swamp house or whatever, you know, like there's no comparison where you want to house your assets. And so, given the complexity, given the urgency, given the modest costs, and given the record of Coinbase, I believe that sovereign wealth and private wealth will choose them as the institution of choice to custody their assets. And so, like, just think of what that means. That means they're instantly the biggest bank ever seen. They're instantly bigger than JP Morgan. Instantly. Now, already, today. I mean, if the crypto future is coming, not that it's going to change the world, but it is a part of the world. And so, and it will change the world, totally. It'll change the world. And so, yeah, those people are not going to want to take the risk of custodying their own cryptocurrencies. They're just going to want to take the safe bet or whatever, which is probably why I think we will have a technical breakout of Bitcoin soon. because I know how these Bitcoiners think. They are fucking goblins, like they are hoarding their gold. All they want is another coin. That's the only thing they want. And they will sell their child to get it, freaking goblins they are, these Bitcoiners. And so they're hoarders and they're going to hoard. So like they have no reason to sell. Why would they ever sell? Their cost basis is like, $2,000. Like they're never going to sell. And there's just no reason to sell, right? Like they can never get trapped because their cost basis is so low. And I mean, they can sell if they're dumb, but like, even if they sell, they're going to buy back in. Like the people that are really into this space, they're treating it as an economy. And so the point of all this is, why is Coinbase going to be more valuable than JP Morgan before 2035? I think it could happen a lot sooner. Like there's just so many reasons. Okay, so we've talked a little bit about the brand value and the importance that is going to bring to institutions like and private wealth and all this stuff. Okay, that's like one thing. So like, let's just talk about their investment arms. Coinbase owns every crypto company. They own like half of every crypto company. If they don't, they own like 20%. If they don't, they own like 5%. Like there's nothing they don't have their hands in. As far as an investment portfolio, they bought everything. Their book, it's everything. I don't know, like if they don't, I'm sure they're working on a way to get it. And the same thing goes with like their accumulation of crypto funds. I haven't heard them talk about this or confirm this in a while, but I'm pretty sure that they are quietly accumulating and not reporting it on the books because of the risk involved. But one day they are going to report it on the books, and it's when the SEC is going to recognize that it has book value. I bet that's when. And that is just going to make the share price explode. That's like many years from now. That's probably one of the types of events and catalysts that will propel it past traditional banks. And what it'll be is people will be looking at Coinbase and the talking heads will say the same story that they do now with Tesla, where it's like, how could Tesla be worth 5 Toyotas or because it's not Toyota or GM or Ford. Dummy, it's not. Sorry, you can't say it, but it's not. Super not. They're not the same thing at all. And the reason why you're going to say that about Coinbase, and I'm going to call you a dummy again, is because they're not going to understand that the value of banks is so different than the value of a company like Coinbase. And so, yeah, like they're going to be comparing them to, I don't know, Wells Fargo, or JP Morgan or other banks or regional banks. They're going to be like, how can this be worth 5 times the value? Okay, well, it's not a bank. Anyway, it's a platform. Coinbase is a platform. And so why are they a platform? Okay, so we talked about their brand value. We talked about the investment arm where they're just like always accumulating companies and crypto. They never talk about it. Completely unrealized value. On the risk side, I do see fee compression as a risk, but maybe not. I mean, it just seems like the more you do something, the cheaper it's going to become. And they're working already to diversify away from fee income. But I think they'll probably always have a hand in that. And actually, it's not right to think of it as fee income. You have to think of it as transaction income. And so, like, they are going to transact billions upon billions and already do, right? But like, it's only ever going to increase. And in that stream, all they need to do is hold out their little fucking finger for a fraction of a second and redirect a tiny amount of that flow anywhere they like. and it will just be a gushing wave of cash. And so like their revenue could be off the charts. I mean, it depends on how they invest. Like what do they even need? They don't need more people. They can grow their city as big as they want to make it, but I don't think they need to because of AI. It's the same reason all these tech companies that should create an overwhelming efficiency breakthrough. What do they need? Just to accumulate more, to be Coinbase, to be the base of all the coins. And so, but they already are. Anyway, I'm super bullish on them. And I think they're always going to have transactions. They're always going to have that be an incredibly profitable part of their business. I just don't know if it's like through fees or what. Maybe it's through staking, something, but like it's what I described. They're handling so much money. All they need to do is just like skim the tiniest, like nobody would miss it. And it would just be worth tens of millions a second or whatever, like I can only imagine. I made that number up, but you can imagine how much it would be if crypto 100x's in the next 10 years or more. So yeah, like the crypto economy is pretty exciting. And the reason why people get excited about it is because I think that they natively understand the value of being able to transact without a third party in a way that's completely trustless. Like you can trust the algorithm. You don't have to trust anything else. You just trust the algorithm. And so to me, that is like the clear and obvious value of crypto. And people that say it has no value, you can say that about anything. You're just saying, I don't value it. Like I can categorically say and describe that it does have value, at least if you value the United States dollar. And then so you would say, well, it's not going to have future value. I could say that about anything, like you're just speculating about nothing. Like you have to acknowledge why cryptocurrencies are popular and gaining traction and what is objectively useful about a distributed, I got to do a reaction video to this, Gary Gensler. Like people talk about like there's no real value in it. There's value just in that a lot of people hold it. Like that's like saying that Facebook has no value. No, it has a ton of value. It's called network value and it's very valuable. They have 1 billion little nodes that have information about each other. All of that is accumulative value. Anyway, point of all this, there's a lot of ways to quantify and qualify the value of cryptos in general and specifically Bitcoin that the naysayers refuse to acknowledge. Things that are intrinsically valuable, similar to gold. Like, why is gold so valuable? It's not because it's rare. That's not why it's valuable. It has an intrinsic value. Bitcoin has an intrinsic value. So like, why is gold valuable? It's highly conductive. It's incorruptible. It's lustrous, like it's beautiful to look at. Gold has all of these qualities that are independent of its scarcity, and that provides intrinsic value. So what's the intrinsic value of Bitcoin? Well, the network is a big one. The distributed ledger, the ability to store value without having to collateralize a navy. I don't know. Like what makes the USD, the United States dollar, valuable is the might of the US military and the might of the US economy. It's those two arms. That is what makes the US dollar so transactable, and it's the world's reserve currency. And that's for obvious reasons. I don't actually think that's ever really going to change. Maybe if we create a world government and there is just a unified currency like USDC, and that would be more of a tool of convenience. I think you would still have every individual currency contributing to the value of that currency. It would be some kind of abstraction in that way. But yeah, like we could have different new currencies emerge over the years that are backed by states. But this is the first real currency to gain general adoption independent of a government in human history. Not really, because people probably did shit like this with shells. But since like 400 BC or whatever, it's not even worth thinking about. This is the first time in history that people have been able to transact value across space and time independent of any authority. And so you just got to think about like how many transactions are happening between people every day, and think of the minor cost of authority being eliminated in cryptocurrencies. So like already there's a cost decline. Already there's a reduction in cost. And so an equal measure of value. But anyway, that's just one part of Bitcoin. One valuable thing that is just going to like annoy the shit out of people about Bitcoin is that it's very deflationary. It's just, nothing could be more deflationary. It's rare. Bitcoin is very rare. And it's only going to get more rare with time. And people do not understand that. And they don't even know how to think about it. But like, imagine if everybody wanted a drink of water, but like the sun was going to evaporate it in 5 years. I don't know. Like, it's hard to think of something that can actually illustrate the rarity of Bitcoin, but I can just tell you what it is. So it's rare for a few reasons. One, there's only 21 million that could ever exist. So like there's a capped number. Two, we've already mined 19 million or something. Like there's only a couple million left. Three, the people that buy Bitcoin are psychopaths and they never sell it ever. They never sell it. They just keep holding. And so it's how it's always been. It's always been that way. And it's always going to be that way because they're hoarders. And so there's people that are accumulating on a fixed supply. So what else? Oh, yes. And then the ultimate one that I think nobody factors in, which I like to think is an original idea, is partially, you could say it's from experience, that a lot of Bitcoin has been lost. Like, I think way more Bitcoin has just been fumbled, like the 10,000 Bitcoin pizza or the hard drive in the landfill or whatever story you want to pick. I've got mine. I was betting whole Bitcoins on Satoshi spin or whatever back in the day. And so I think there has been, all of those are now starting to reflect in the price. And that means that the price goes to infinity. It just goes to infinity. And that's what people don't understand about Bitcoin. And this is the reason I've never been too concerned with spending it, because I'm like, there's only two options for Bitcoin ever. I've known this for over a decade. How long? 13 years? 12, maybe? I don't know. Over a decade, I've known that Bitcoin, has transactable value? That there's only two possible price outcomes in the longest tail, or like in the full scope of history. That's what it is. And so the two possible outcomes for Bitcoin prices, it goes to zero or it goes to infinity. Like those are and it can't really go to zero though. It can't really go to zero. And if you don't understand why Bitcoin can't go to zero, you don't understand Bitcoin. It can't go to zero because there's this floor. Like the floor, I'm part of the floor of Bitcoin. I'm part of the floor. And so like truly a lot of Bitcoin has been squandered and lost, and people forgot their keys and all sorts of shit happened. And then the people that didn't do that are obsessive psychopaths that only hold it. And then you're going to say, well, why are people going to buy into that? Because it was first. That's why. Because it has the most infrastructure built on it. And Ethereum is the same story. Like anyone could have built, not anyone, but like any like young genius type guy could build that same thing that Vitalik built. But he was first. He was like immediately. And Yeah, the crypto space is heating up and it's maturing. And so the number one company in the space is Coinbase. They're the number one company. They're the most important company. You could have bought them for $40 12 months ago. You might be able to sell them in a decade for several thousand a share. And so, those 2026 calls are starting to look pretty juicy. But Coinbase is a really exciting company because they are at the core of everything that's important in cryptocurrencies. And it's an indexed bet. Here's how you can think of it. There's more I can talk about the value, but I got to run. So we'll wrap up with this because we're already an hour in. Holy shiz. We'll end with this. The reason why Coinbase is so valuable is everything I just described. But what? Well, it's like buying the SPY or the QQQs of crypto. It's like buying an index. It's like an index. Coinbase is like an index. Think of Coinbase the way you think of the S&P 500 or the NASDAQ, whatever it is, or the Russell 2000 or whatever. It represents the entire space. And so with one single instrument, you can deploy into the entire space, which is basically magic. And so it's really exciting. It's really exciting times. And yeah, it's exciting to see the durability in the Coinbase business. And really, I think we're getting a good feel for how things operate mechanically in the business, which is that transaction, there, like a lot of revenue is going to just be tied to price. That's just how it is. And that's very, very good news. So yeah, thank you for tuning in. If you watch this whole thing, champ, leave a comment, say hello, like, subscribe, do anything, maybe help somebody. Do